Wednesday, March 19th, Fed Day. Hope everyone had a good day. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure should be the exact same as yesterday, even though I traded a lot on pretty much all these names. And I did overall reduce some long risk today. So working my way from like maximum long risk where I was at lows to drawing down a little bit as we continue to move higher, which is the game plan, but still have enough long exposure as well for any potential continuation that this market might want to give. So let's jump in and have a look at our day. So SPYs here are up about 1.2%. Qs up 1.4%. We're up a little bit after hours. The IWM is up 1.6%. TLT up 0.5%. So interest rates lower a little bit. That was a decent move higher in the TLT, starting at 2 o'clock with the Fed today. And what did the dollar do? Dollar's up a little. What did the financials do? Yeah, XLF gave some follow through. KRE gave some follow through. Okay. Yeah, so decently positive day here for the market. More or less kind of went as expected. We had a strong beginning of the day. We had a nice gap up to above yesterday's intraday resistance of about 562. We mentioned that spot in the morning meeting. Like, the SPYs can hold above 562. We're looking pretty good going into the Fed. Basically, that happened. We had a quick pullback in the beginning of the day to test the 80 MA on the 5-minute. By the way, this is that pattern I talk about a lot that I really like for continuation in the direction of the gap. Whenever we get a gap, especially a large gap, and the gap up this morning wasn't, I wouldn't call it large, but it was enough to create some degree of small upside extension. So everybody's been on the team for a while knows how I look at extension on multiple time frames by using the 8 and 21 EMA. A lot of times we're talking about this on the daily chart, but it applies in every time frame. And when you get a gap up or a gap down, you inherently create extension on the small time frames like a 5 and 15-minute chart. That's a result of the fact that we are just gapping higher or gapping lower. So when the market first opens up today, it opens up at 562 spot 83 with the 80 MA at 561 spot 26. So not a huge amount of extension, but you've got $2.50 of extension at the opening print, and obviously some volatility in this first 5-minute bar, so that extended a little bit further, came back in. But what I'm always talking about whenever we have these gaps, if you're looking to fade it, then if that's the signal, then fade it. But if the signal is that you're looking for potential continuation in the direction of the gap, I typically don't like to chase the gap up with a buy. I like to be patient for that first, depending on the size of the gap, 15 to 30 minutes, sometimes as far out as even 45 minutes, and see how the market satisfies the small time frame upside extension that comes from the gap up. And today, we did that through time and price. We went sideways a little bit, kind of these first 10 minutes. Then we had a pullback into that 80 MA. Then we were no longer extended at all at that low, created a pivot point, and then worked our way higher. The only thing that could have made this better would have been if there was more of like an actual tradable signal off the pivot, like if this candle closed with like what I call a continuation hammer, like a downside tail on that candle. That would have been like a much better looking thing just as far as like an execution setup goes. But the principle is the same. Correcting the extension. Now we're no longer extended. Now the market can go if it's going to, if it wants to, now it can do it. And then that's exactly what happened. It's pretty much the low of the day today. We worked our way higher. We were strong for the most part going into the Fed. Midday action, sideways, boring, and choppy from that, 11 to 2, also as expected on Fed days. And then finally, the market wakes up on the Fed. So no change in interest rates as expected. what we're looking for primarily was the adjustments adjustments to economic expectations and any adjustments to balance sheet roll off from the Fed. The economic the changes in the economic expectations that the Fed provided us, I think we're pretty in line with expectations. Basically, Fed is predicting a slight additional slowdown from their last reading in growth and a slight additional increase from their last reading in inflation. So that kind of all was in line. I think that the biggest thing was on the timing and the amount of a reduction of balance sheet roll off. So basically, some degree of quantitative easing. I'm sure that there's a way that you could figure out, and I forget exactly what the number is, the number that they're rolling off. But I'm sure you could figure out like what that turns into in terms of like a Fed cut, if you wanted to think about it in a different way. So maybe it's like, I don't know, like an eighth of a percentage point equivalent of a Fed cut, something like that. But the bottom line is that it was a dovish signal, and that they're going to be reducing that balance sheet roll off starting April 1st. So the timeline chatter that I had, first of all, I hadn't even seen too much chatter about balance sheet roll off until this morning when I was going out of my way to do research. A lot of time, like I generally on these Fed days pretty much wait till the morning of to do the majority of my research, but a lot of times the information is just kind of in your face over the course of the week or so in front of the actual meeting. And it was really only today when I was doing a deeper dive that I saw any chatter at all of the balance sheet roll off. And that chatter that I saw was that it could happen anywhere starting as soon as basically today, all the way through, maybe like August. So the Fed indicating that they're going to start to do that on April 1st, I think is on the earlier side of any potential timeline that people were looking at. And for other people, it might have just come off as a surprise entirely, because again, I really didn't see that language coming from too many places. So it seems like the dovishness of the Fed coming from the balance sheet adjustment in conjunction with Powell doing a good job to try to assure everybody that the economy and unemployment is still in a good place led to a pretty nice rally here. Initial uptick at 2 o'clock, and then at 2:30 when the presser started is really when we got some bigger upside continuation. I'm not thrilled with the close. I would have liked a little bit of a better close, but we stayed above key levels. I was saying bulls are in control as long as we stay above 566. So again, not the best close. We pulled in from as high as 571 to 567 into the close. So not ideal, but still above the 566 that I was looking for bulls to maintain control. Same thing with the Qs. Qs pulled back from a high of over 485 down to like 480.50, closing at like 481. 480 was what I was saying, and we all know that 480 has become a really important daily level. 480 was an important line in the sand for me for the Qs to hold above. So into the close, SPYs and Qs did hold above those key levels. I wish they did it with a little bit more conviction and a little bit more cushion compared to the actual high that came in post the Fed. But we'll see what happens tomorrow. So like I was mentioning in the morning meeting, the Fed day itself, the price action of the Fed day itself from 2 to 4 is very reactionary in nature. It's a lot of robots having robotic reactions to headlines as they come across. And that creates these reactional moves that give us a lot of intraday volatility and sometimes some direction. It tends to be, this is not always the case, but it tends to be that any bigger move that comes from the Fed typically happens the next trading session. So the big money managers, they take the evening to digest the news, to consider it all, and then put real money to work the next day. I have seen it happen where you get continuation in the direction that we moved on the Fed day itself. I've also seen it happen where you trend in the opposite direction of the initial movement from the Fed, meaning today we're up post 2 o'clock. I have seen, not with enough consistency to say that we should see, if we're going to trend tomorrow, it's higher or lower. I've not seen it with enough consistency to be able to pick the direction on it, to be honest. But the day after the Fed day tends to have a higher probability of actually being a trend day. The direction of that, I'm optimistic because we traded well today, but it really could happen in either direction. We've seen that happen many times in the past, where that next day you trend in down compared to the initial up move, or up compared to the initial down move, or in the direction of the initial move, if that makes sense. So we'll see what happens tomorrow with we gap and with how we gap and how we trade. But so far so good. I'm really paying attention. Key daily chart levels I mentioned in the morning meeting are pretty much the high from 2 days ago and the low from yesterday. The low from yesterday obviously held. For the Qs, we didn't breach the high from 2 trading sessions ago, which is not ideal. The SPYs did, but didn't really give any follow through. So 570 is really important. We got above it today, but we didn't get any follow through on it. We closed below it. And the IWM continues to be where the relative strength is recently. It closed much better with a smaller upside tail in the SPYs and the Qs, and it managed to close above the high from 2 trading sessions ago. So the Russell's given us a good signal, but I keep talking about how we could, if we're able to break higher, get a feedback cycle of buying in this market, at least in the short run. And I'm not convinced necessarily by where we close in the SPYs and the Qs that we're ready to trigger that at this point, but it's something that we'll continue to pay attention to. So SPY 570, really important. If we get above that, get some further buying to feed into itself. Qs basically 485, get above that, maybe it feeds into itself a little bit, where then I'd be looking for more of a test of the 21 EMA or possibly even an overshoot of the 21 EMA. Without a doubt, though, the price action gets trickier as we get closer to this midpoint between the 8 and 21 EMA, insofar as risk reward of continuation if you don't already have your positions on. So, for me, I'm doing some fun day trading here or there, and I've been making a few extra dollars that I've been putting in my pocket. But insofar as like new bigger picture positions, I'm really not doing anything new in these areas. I like the idea, and I'll make the most amount of money if I can get a little bit more follow through to the upside to that 21 EMA or an overshoot of the 21 EMA. But for me, the more we move higher, it's really an opportunity to reduce risk, reduce long exposure, put money in my pocket, and reassess things, so that if we don't get the continuation up, I'm not in a bad place. If we do get the continuation up, I'm really in a good place. And the risk reward of doing anything really new right here is difficult. But the more we move higher, the more I actually like the idea of having less long exposure, broadly speaking, and more short exposure, though you can still find on the intraday some good risk reward spots to put longs on that you could keep tight but try to hold overnight to see if you can get that move to SPY 575 to 582, which I think is possible. So that's kind of, I guess, the macro on the index side. Let's see what happens tomorrow. Let's see how we trend tomorrow. As far as individual stocks go today, I did some cute little day trading in Meta, in Apple, in NVIDIA. I was able to make a few dollars in all of them, but nothing worth writing home about, nothing really worth talking about. So I think that's pretty much all I got. I don't really have too much today, despite it being a really important trading session with the Fed and everything that actually happened. So I'm happy to turn it over to you guys for any questions that any of you may have. So if I had insider bias from yesterday, did that just get reported right now? 5-cent uptick after hours. From Richard, do you have a target range for up-down move tomorrow and Friday? Not necessarily for tomorrow and Friday, just kind of the bigger picture range that I've been talking about for the upside in the market, which is basically the 21 EMA, if not an overshoot of the 21 EMA, And what I keep also mentioning is that every day that goes by that we don't work our way higher, that 21 EMA comes down, which means that the target on the trade gets reduced. So it's an extra reason for me to be reducing exposure on the upside. Though when you look at like that CTA data and some of the liquidity information, you recognize that we could see further stabilization in the market, or more of a upside grind or trend that lasts maybe through the end of the month. So yeah, we'll see how that plays out. But generally, I would just call it the 21 EMA on the daily chart, not necessarily for end of this week. I don't necessarily have a timing date on it, but that's what I'm looking for, broadly speaking, for continuation. If not, even potentially an overshoot of that 21 EMA. From Jerry, could you walk us through your strategy or a strategy for the close each day for any new longs or shorts just for a scalp? So I don't like new trades into the close because the time frame is limited. And I actually did it today with NVIDIA and made a couple dollars and very quickly got out of the way. But my problem with day trades into the close is that I like to be able to have time on my side. Meaning, if I'm putting on a day trade at 10 a.m., I know I've got all day potentially to massage that trade, to be there for the full reward potential of the trade. Whereas if I'm putting on a trade at 3:30, I only have 30 minutes to realize the full reward of the trade, and sometimes it's just not enough to get the stock up to where I want it to be if it's a long, for example. So I fairly rarely put on new day trades in the last kind of half hour of the day. I did it in NVIDIA just because the market was pulling back. I thought I could get a bounce from it, and then I did get this bounce back from the market here, this 3-bar bounce, but NVIDIA was actually relatively weak in that bounce, which I really didn't like, and I just didn't have a lot of time. So I ended up liquidating the position ahead of what my initial target was on the trade. Initially, I wasn't looking for a ton anyway, but I was probably looking for a move to like 119.50, 119.46 or so when I first entered this for a bounce back, and then it overshot more to the downside than I thought it was, and then on this 1530 bar, it was weak compared to the Qs, which I really didn't like. Really, a lot of times what I've been doing recently on a lot of these day trades, honestly, is I've almost been choosing the stock I trade randomly. I'm really trading the market. And I try to find something that I think can be relatively strong. And I was basically trying to go long because of this QQQ pullback. I thought I could get a bounce off of it, and I bought NVIDIA. And it was just relatively weak on that bar, which I just didn't like. So I ended up kind of taking down what I was looking for on the upside on that, and liquidating the position. Luckily, because then I didn't get stuck here on this pullback in the close. But part of the reason to kind of jump the gun on liquidation was the relative weakness. But part of it was just that I just didn't have time. Like if I had more time to massage the trade, knowing that it was only going to be a day trade for me, then I probably wouldn't have liquidated the position. I probably would have been, giving it more room and seeing what it can do, and seeing if it can get a little bit closer to my targets. But that's the problem again with day trades in the close. So I pretty rarely do it. But today was such a big movement day that I thought I could make a couple dollars, which I did. Though you could certainly make the argument that the reward that I made on that trade was not worth the risk that I put on. And you'd be right. From Eli, with the closes on the indices like this, are you mostly looking for upside potential, at least on the day trade side? So I'm looking for more upside potential on the swings that I already have on, like I was mentioning, though I don't like the idea of necessarily putting on new swings here. For day trades, I'm not sure. That's something that I would want to assess in the morning, because you're not putting on any more day trades today, obviously. So we want to assess it in the morning based on how we gap. And then kind of seeing what the price action looks like as the day actually opened. There's a good chance that if we open up flat tomorrow, I'm going to be given one of those morning meetings that no one probably likes, where I talk about how I don't feel like I have strong conviction here for new positions at all. And that would be on a day or swing basis, which just is what it is. It's part of trading sometimes, right? You don't always have the greatest opportunity every single day to make $1 billion. And if you try to treat every single day like it is that day, you'll probably just lose money. So let's assess it tomorrow and we see what the gap looks like. But as long as we're above that SPY 566, and as long as we're above that QQQ 480, I would rather be long than short. From Dave S., I want to look at using footprint charts. I've never heard of such a thing. Do you have an opinion one way or another on them? And if positive, is there any specific charting platform that is best? JR has an open house this week, and it looks very compelling on smaller time frame entries. I'm sure if you showed me what a footprint chart is, I'd recognize what it is, but that term is not a term I'm actually familiar with at all. So, Sierra chart, don't know that one either. So yeah, I got nothing for you on that one, Dave. I apologize. I am very happy with how my charts have been, which is just the Japanese candlesticks, the volume, and a couple moving averages that are really important to me. So, wish I could be more of a help, but I don't got anything for you on it. Cool. Anything else today? Did you guys hear that? That was the ice and snow rolling down off the roof. It scares the crap out of me sometimes when that happens. From Rex, was looking for the small time frame continuation alongside today as well. Tesla got an upgrade. I hated that upgrade. That upgrade was trash. Got an upgrade today and it showed relative strength at the open. That it did. At 9:45 today, the market gave a point. However, Tesla was still a little bit extended from the ADMA on the 5, but at 9:50, Tesla gave a downside tail back to 230. So I took a long there as the market continued higher. I thought it was a decent trade, but then I just stopped myself over very quickly. Yeah, I don't know. I didn't like that this thing was breaking lows. I actually remember talking about Tesla around this time, really off this second candle. I didn't like that Tesla was making lows when the Qs at that point were making highs. So I get your point on the upgrade and the relative strength that it was showing on a percentage basis with the gap up, but I didn't like how it was trading at that time. With that said, I don't dislike your trade. This is very similar but different to the trade that I was already describing when I was looking at the gap up in the SPYs that I was going over. Get a big gap up in Tesla, had positive analyst action that was helping that gap up, moving sideways here for 20 minutes, getting the price correction into the ADMA tails right back up. I like that trade. Again, don't love that the Qs at that point are making highs and Tesla's making lows. To me, that's a warning signal. So that would be a strike against the trade if we're measuring our layers of probability. But generally speaking, that's a setup that I like. So I have no issue with you taking the trade the way that you took it, and you have to manage your risk somehow. So using the low of that tail into the ADMA makes sense. And it's just unfortunate that for whatever reason it was being relatively weak for that 10 or 15 minute period of time, and that seller pushed it to that new low before it actually gave the bounce. So yeah, I don't hate the trade at all. What else, guys? Anything else? Funny how some of these important days when we get like a Fed meeting and stuff turn into shorter afternoon meetings. Last jump for stocks on a Fed day was in July. Wow. A best jump since July. Got it. All right, cool. Well, if nobody has anything, I'm happy to do a quick one today. Rest up. Tomorrow will be another potentially interesting day, potentially a trend day, and we'll see how it goes. So see you then.